Hey guys, welcome back to another day, another episode. All right, just going to get this setup done here. Give it a minute or so before we get started. Yeah, we're going to cover a lot in this stream today. Definitely a lot of stuff happened in the last 24 hours, or the last 12 hours rather. So there's gonna be some good things to talk about here today. I just realized I didn't even have my mic next to me. Man, that's embarrassing. Anyways, wow, what kind of streamer am I? Anyways, just letting you guys know we're gonna have a lot to talk about today. It should be a good video. Um, yeah, so we'll get started here in just a second. Just need to make sure I'm all set up here. All right, cool. Yeah, so we're going to be talking about, kind of what the Fed is doing. We're going to be talking about AMD. We're going to be talking about Palantir. We're going to be talking about the tariffs that are being placed on China because that has been some really big news, right? All the news surrounding U.S. tariffs on our neighbors to the north and south, and then also putting tariffs on China. But unlike Canada and Mexico, it doesn't seem like China is willing to accept that or cave into demands by the U.S. administration. So I wonder what that will have, what kind of impact that will have on the stock market or on stocks in general. So we'll get into all of that and more. All right, so let's get this stream started, guys. All right, is this working? Is this not working? Boom. All right, there we go. All right, so first one we're gonna hit is the Fed's hawkish lean and the AI tech jolt are shifting the bull market narrative, and this is more of an opinion piece more than anything. But it's still good to at least read these types of articles and see other viewpoints. So Morgan Stanley, obviously a massive institution, a really big bank, and when their people are saying something, it's not that you want to just kind of discard it, but you just want to keep it as a data point in your kind of macro view, right? Whenever you're thinking about the bigger economy or the bigger stock market at large, you just want to take these little opinion pieces here. It's not about being right or wrong or anything like that. It's more you just want to just be aware of other people's opinions or other people's thoughts, especially people from these large institutions. These people are pretty smart, and if they're seeing something and saying something, it might be worth noting and at least keeping a data point in your log. All right, so let's take a look. Sita was good morning. Good morning. All right, so Morgan Stanley Wealth Management is seeing a stall in the S&P 500 and said the Federal Reserve is halting its run of rate cuts is contributing to a change in the bull market narrative. Of course, we've been in this bull market over the last couple of years. The stock market just seems to keep going up and just there's nothing stopping it, right? Interest rate increases didn't stop it. Wars didn't stop it. Change in presidents didn't stop it. All these, the collapse of large crypto firms didn't stop it. It just seems to be on a complete tear, and it's going to just continue going up. Absolutely. Hey, I got my coffee right here, man. Unfortunately, this is instant coffee because I ran out of coffee, so I'm a little upset about that. But yeah, I gotta work on getting more coffee today. Anyways, another important part of this was. And again, these are just opinion pieces. All right. So yeah, right here. Although January's rate cut pause was telegraphed, many still hoped the Fed would express confidence in accommodation. It did not, and investors now need to admit that policy-driven multiples expansion is near its limit, meaning that basically the stock market is just going to keep going up. Like we have to stop just believing that. Meanwhile, the bull market narrative has centered on U.S. tech innovation and the Magnificent Seven, i.e., what is it? Facebook or Meta, Apple, Amazon, Netflix, Google, Tesla, and NVDA. All right, that guide a soft economic landing, sustaining momentum. Last week's events, and she's referencing the whole DeepSeek fiasco, strengthen our view that the narrative is shifting. We are entering the great normalization. This is a new term. So this is a new term. I'm going to do a little more looking into that, see if anyone else is using that. But yeah, it's called the Great Normalization. She said, we assert that it will be dominated by rate and valuation normalization, renewed focus on earnings, and earnings growth as a driver of equities. So basically what she's saying is that instead of just, putting money into all these really high end tech growth stocks that are pretty much, following the AI boom, she's advocating or saying that, to look for equities or stocks that are, centered around, like actual like revenues, driving revenues, probably, in my opinion, probably on the Dow Jones side of the house, probably investing in those types of stocks, blue chip companies, things like that. See, it says, ain't nothing wrong with the 3-in-1 instant coffee. You know what? That's been saving my butt lately. But yeah. So anyways, yeah, it's this is new normalization or the great normalization. I actually like this term because it's starting to look that way. Interest rates are going to remain elevated, which we covered kind of last week in one of our lives. I think companies and real estate is just going to have to accept that. I don't think rates are going to come down as much as we hope or as much as we think. And betting on interest rates is not a good strategy for investing. Instead, you should just invest in prudent companies that have excellent, balance sheets, that are responsible, drive shareholder value, all those, buzzwords you hear. But that is pretty much the way I'm looking at it as well. Like if I'm going to be investing in anything, I want to make sure that the company is not, just like they're not making any revenue, but their stock price seems to be going up. Like I want to personally avoid companies like that because those were all the rage back in 2020, 2021, where no company was making any money, but people were just dumping a lot of money into them. And they ended up paying the price literally because the share price declined and never recovered. One of the biggest examples I have of that is, again, the EV craze, Workhorse, Rivian, Neo. Like you can look at those companies and just their stock price will never recover. Anyways, moving on. So AMD reports record Q4 growth revenue, but data center growth slows. So we'll take a look at the data center here in a minute. AMD Q4 2024 results demonstrated record revenue growth for the quarter and showed the chip maker increasing its market share, likely at the expense of rival Intel. So we'll take a look at Intel as well, because again, they used to be the top dog. They used to be the best in the business. They used to be the Wall Street darling, and now they are basically a shell of their former self. And there's been talks about Intel being bought out by a private equity group or by a group of other companies. So we'll see what happens with Intel, but I can't see Intel coming back, despite all the government contracts they have and everything else. Like it's just, I don't think this company is really going to be around that much longer. But we will see. We will see. Despite the market headwinds in devices, AMD gained market share with its AMD Ryzen processors as the segment grew 50% year over year in fiscal year 24, said Seeking Alpha analyst Michael DeMonte. However, AMD continues to trail its rival NVIDIA in artificial intelligence accelerators. So basically, demand for devices like, probably desktops, kind of slow, especially for AMD, but they're really putting a lot of money into their AI chips, right? And it seems like with AMD's Ryzen processors. So they're putting a lot of money into development of AI. So if you want kind of like maybe an NVIDIA type of company, but not at the NVIDIA price, then AMD would probably fit that bill. But also, you have to take into account AMD also makes computer chips. They don't just make graphic processors like NVIDIA does. So AMD purchased ATI way back in the day. And this is kind of, they focus on both, graphic chips and computer processors or computer processing, right? So something worthwhile to keep a look at. You never know what can come from AMD. It's something I have always eyed, but I never bought. But AMD, definitely something to keep in the back pocket. All right, so let's look at their share. Let's look at their share prices. So we have AMD. Looks like it's about to fall off a cliff, but over 5 days, doing well. It looks like again it's going to fall off a cliff. not so well in the last month or the last 6 months. Year to date, it's still down. And over a year, it looks like the share price has just been declining. But this is not unique to AMD, okay? And this is what I'm getting at. Like, if you're, remember this article, this Morgan Stanley Wealth Management person, who is she? What was her name? Yes, Chief Investment Officer Lisa Shalit. She just said this. Like, she thinks there's going to be a drive away from tech AI, type of companies and more back into, dividend paying companies, blue chip companies, just regular non-tech companies. Right. And it looks like it's coming true. So if we look at Intel, right. And remember Intel, we were just talking about them. They are not doing well at all. Like, they've been really just steadily declining, and who knows if they're going to recover. I don't know. I mean, if we look at their price chart, it looks like they did have a massive recovery, but then they've just been dropping ever since. So who knows? Like, who knows? This was, .com bubble burst right here, so you got to kind of discount that. And just continuing on, 2020, 2021, when interest rates were low, everyone's buying up companies. And it was really around here when the story started forming about Intel. And then this was the whole AI stuff. And yeah, it looks like it's just been going down. So again, could this be a deep value play or something of that sort? I have no idea. I don't know. But yeah, just looking at Intel by itself and the share price, it doesn't tell the whole story. You still want to look at like Intel earnings and things like that. I mean, just looking at it real quickly, they have not been making any money, right? They've not been making any money. So year over year, everything's been down. All right, this is almost like not super micro. This is almost like MicroStrategy, right? They haven't really been making any money. So who knows how they're going to be in the future. All right, moving on, we'll look at NVIDIA. NVIDIA, again, they've just they had a meteoric rise over the last couple of years. And obviously, it first started with the whole NVIDIA chips were great for Bitcoin mining, right? It started with the crypto phase. Everybody was like, oh, NVIDIA's, they're creating all these really high-end GPUs. At one point, they had a GPU shortage because Bitcoin miners or crypto miners were buying up so much of these chips and then using it to mine crypto. As a matter of fact, China had, they had shut down like thousands of farms of mining farms. And all these farms had NVIDIA chips, right? They all had NVIDIA, devices. So I kind of wonder what happened to some of those, especially now that we're talking about the U.S. kind of halting chips being exported to China, and then China just coming out with their DeepSeek. So, the technology would be fairly old, but it still begs the question, what happened to all those GPUs and all those chips that they had? So anyways, yeah, this right here, and then they rose because of AI, the AI thesis, basically under the new administration, AI is going to have less regulation, more people are going to invest in the AI. And then there's the Stargate project, which is, basically a $500 billion project, for AI infrastructure. We already covered a lot of this, but, again, when we're comparing NVIDIA, if we compare, let's do 6 months, because I think that's fair. We do 6 months with that against AMD. Again, AMD might be, I think it's a great company. I'm not going to say I own it, because I don't, but I think it's a great company. This could be something you could keep on the radar. It could be a challenger to NVIDIA in the future. Who knows? But right now, Intel, we know, is going in the trash. NVIDIA is doing very well. And I mean, that you could see it in their earnings. Like, look at that, 93% year over year. Like, that's really, really good. All other metrics, amazing. Like, they're killing it. All right, so let's look at a quick data storage REIT. All right, this is a data center REIT. Basically, what they do is they own the real estate and they lease out. They build it up, they build a building, they put HVAC, which is very important for, especially for large server farms, is AC. They install the racks. They do all the hardware stuff, all the wiring, all that, and they lease out the space, right? So let's just see how a data center is performing if we look over the last 6 months. So it is very, well, it's not common for REITs, for real estate investment trusts, to really spike, but this is, Equinix has been, lumped in with the whole technology stock game, so everyone's just been piling money into anything that has to do with AI. And Equinix is definitely fitting that bill because they own the data centers that AI is being hosted at, right? So when you think of these large investments into AI, you can bet that Equinix or DLR, Digital Realty Trust, or even Iron Mountain, they're going to have a part to play because they're going to lease out these servers. They're going to lease out these server farms to these large companies. So they look like they've been doing pretty well. I mean, they got a very low dividend, but their share price is almost at $1,000 a pop, right? Almost at $1,000 a pop. I think I owned this REIT up until I want to say about, I don't know, maybe early 2022, and then I sold it, and then I don't regret it, but whatever. I think I had it when it was like in the around the high 400s or early 500s. I can't quite remember. But yeah, this again, whenever you're talking about data and communication and internet, you're probably hitting a REIT of some sort, whether it's a cell tower, a data center, or even the fiber. Very likely you're hitting a REIT that owns that equipment. So that's why another reason why I like REITs. But anyways, moving on, we have Palantir that came into the limelight. Huge. So congratulations first off to anyone who holds Palantir, because if you hold Palantir, you definitely made a lot of money here. All right, so Palantir surges over 20% after Q4 beat. Outlook keeps analysts largely bullish. Shares of Palantir jumped about 22% pre-market on Tuesday after fourth quarter results, and Outlook beat expectations. All right, Palantir is just killing it. They're a big data company. They're used by the alphabet agencies, the CIA, FBI, probably the DIA, definitely the DoD. They're used to basically help them make decisions, right? To look at big data, to look at all this raw data and basically help them connect the dots, right? What used to take probably 100, 200, maybe 1,000 analysts, now they can just do it with a couple that are using the Palantir software. So this company is definitely going to do well because it's lumped in with the whole AI, all the AI stocks and everything. It's no surprise that this company is doing really well, and it's reflected in their share price. You can see that is a huge, massive spike, right? If we look at over this last 6 months, it's just been going up and up and up, right? If we look at Max, I know we covered Palantir yesterday just for a brief moment, but yeah, it's definitely an interesting company. I don't know. There's a lot of people. Well, there's some analysts out there. If we go back here, oh man, I think I removed my highlights. No, my highlights are in something else, I think. But anyways, yeah, Morgan Stanley and Bank of America, their analysts are giving Palantir buy ratings, and they're basically saying, let's see. So for BofA. Where is BofA? Yeah, so BofA reiterated a buy rating and raised the price target to $125 from $90. All right, and then also for Morgan Stanley, same thing. They upgraded Palantir's rating from to equal weight from underweight and increased the price target to $95 from $60. So these analysts, they expect big things coming from Palantir. The analyst said that as the AI market becomes more crowded with more commoditized solutions, things like ChatGPT or, Midjourney or Claude or Gemini, just real, more and more people are adopting, how do I want to say this? like normal end users, right? And then you're going to have the companies that can adopt it as well. Since this AI stuff is just becoming more useful in everyday life, but a lot of them are becoming kind of the same. The analyst said that the AI market becomes more crowded with more commoditized solutions. They think Palantir's value proposition is only becoming more pronounced. Okay, because that's also a piece of this. If all the AI companies are doing kind of the same thing, where everyone's using them as kind of like just digital assistants and just helping them, create content or whatever, what's going to differentiate like ChatGPT from Gemini is going to be what additional value it has. Now, ChatGPT and Gemini, they both have several different uses, tons of different uses. They can analyze, like the new O1 model for ChatGPT is going to be able to, analyze larger sets of data and things like that. I don't know too much about the other like use cases for ChatGPT or for the AI models. But when they're kind of doing almost a similar thing, it's like they're not going to be that much different, right? So what this analyst is saying, that value proposition is going to become more pronounced for Palantir because of the data that Palantir can analyze and the decision making that Palantir can offer to its people, right? To its use cases or users. Hey Manish, what's up? Good morning. Or good evening for you. I'm not sure where you're at in the world. Let's see. Yeah. So, anyways, the analysts expect more market value being awarded to the AI value added versus commodity distributors that stand firmly that Palantir will remain as a value adder. All right. So again, Palantir is going to be continuing to deliver more value. All right. So we already kind of covered the share price stuff. So this is also something that's been in the news quite a bit, and that is the whole tariff stuff. Canada, that's right. I knew it was Canada. I'm not sure what's like what part is it the eastern side of Canada or the western side? But yeah, the NASDAQ ends 1% up. S&P Dow rise as focus shifts from earnings or shifts to earnings from tariff tussle, right? Major equity averages closed higher Tuesday as investors combed through another crop of corporate earnings reports while taking in stride news of China's retaliation against the U.S. for the tariffs. On the tariff front, the Chinese government responded by a 10% levy that U.S. President Donald Trump ordered on Chinese products. China is implementing a 15% tariff on coal and liquefied natural gas products, as well as 10% tariff on crude oil, agricultural machinery, and large displacement cars. I don't know what large displacement cars are. I'm guessing those are probably like, I don't know, like maybe like Toyotas or something. I have no idea. Or not Toyotas. What am I saying? Probably like large SUVs of some sort that the U.S. produces. I don't really know what large displacement cars are. But yeah, LNG, coal, basically energy. So that's what they're going to be putting tariffs on. The Chinese, again, we kind of said this over yesterday and last week when the whole tariff stuff started happening. So Canada and Mexico basically came to the table and said, hey, you know what? Okay, we're going to meet the demand. We're going to help strengthen the United States border by placing a couple thousand troops to the north and south, respectively, from Mexico and Canada. But China is not taking this too easy or too lightly. And instead of, meeting any of the demands that the U.S. has, they're just saying, you know what? We're going to put tariffs on you. Now, it's not immediate. The tariffs are not happening right now, but they're expected to be implemented February 10th. So that's about, 6, days away, 5 days away. So we'll see what happens. And you can bet in between all of that, the U.S. president and the Chinese president are going to be talking. I'm sure there's a lot of back channeling and a lot of different, there's probably a lot more to the story than just tariffs. Because we are using it, the United States is using it as kind of leverage against other countries. But, the president did say he was going to implement tariffs on the campaign trail, and that, that did come to pass. So we'll see what comes of this. Oh, okay. All right. London, Ontario. All right. Yeah, I've never made it to Canada. I always wanted to go. I never could. Definitely not over these last 8 years or 9 years now. But yeah, let's take a look at how the markets basically reacted to this. Just one last note. This is from CNN. China hits back as Trump's tariffs go into effect. And basically, this is just saying that the fresh duties announced by China's Ministry of Finance, levying a 15% tax on certain types of coal and liquefied natural gas, and 10% tariffs on crude oil, agricultural machinery, large displacement cars, and pickup trucks. The measures go into effect February 10th. All right. So just got to keep an eye on this. I think, I don't think, well, you know what? I got to take that back. I really think China is not going to cave in, and they're not going to meet U.S. demand because China is our biggest trade partner. Not only that, but our biggest rival. Okay, not just in technology, like with the whole DeepSeek thing, but a rival like as a country. When we're talking about hegemony, we're talking about influence and all that, China is the bigger, threat to America. So I think there's going to be a lot of back channeling, a lot of talk between these two countries, between the United States and China. And I'm going to wait until February 10th to kind of see what happens to the markets. I don't want to make a prediction, but China is stubborn. They're not going to cave in unless they get something, right? They're just not going to cave in. Their GDP is massive, more so than Canada and Mexico combined. So I can't see them just accepting tariffs. Unless if they want to get those tariffs removed, there's going to have to be, some give and get. And not only that, in the previous administration, not under Biden, but Trump's first election or administration, whatever, he had placed a 25% tariff on China for certain goods. So again, I'm just curious what's going to happen of this, what's going to come from this. Hey, Dominic, what's up, man? Hey, welcome to the channel. The ministry also said that it was adding 2 American firms, a biotech company Illumina and fashion retailer PVH Group, which is the owner of Calvin Klein and Tommy Hilfiger, to its unreliable entities list, saying they violated normal market trading principles. We've seen this happen time and time again, where China or even Russia, they'll just make up some of these really bogus claims and then just start adding, companies that have nothing to do with the fight or with the dispute. They'll just start adding companies. Russia is pretty prominent in taking U.S. citizens as kind of hostage, just putting on these fake charges on them and then just holding them as basically political prisoners, and then forcing the U.S. to have to leverage to get them out of there. But that's neither here nor there. They're also going after Google. There was something in here. Yeah, there was something in here that China is also going after Google, and Google only has like a very, very small footprint in China. But again, they just lumped them in. The ministry, I guess, just wants to go after any American company. So how did PVH and Illumina take this? Right, obviously not very good. So their stock went down quite a bit. Look at that drop. Well, this is a little older. I'm guessing this was because of the whole tariff thing, when the tariffs were being thought out and announced. Because this is Friday. That Friday, that's when it was dropped that tariffs would be implemented. So I could see why this dropped. And then if we look just over the last 24 hours, still not doing so well. If we look at Illumina, same thing. It looks like their stock price had dropped too. If we look over the last 5 days, following the same thing as LVH. Again, this is a biotech company, right? This is a biotech company. This is a clothing company. And their stock price dropped almost at the same time, in the same way, in the same form and fashion. All right. So just interesting to note. All right. Let's see. Oh man, we got It's a Wealthy Life. All right. What's up, man? So Manish says you can come here anytime. I'm actually new to your channel. Where are you from, Eugen, and where do you live? I'll come back to you, Manish. All right, I'll come back to this. All right. So S&P 500. How did this react? So yesterday, actually, or today, your guys' time, Eastern Standard Time, looked like the market reacted fairly well, especially with all the earnings coming out. So did very well. if we look at the NASDAQ, which is more of a tech focused ETF, it has like, I think 50% allocation to tech. They did very well. They were up 1.26% on the day, whereas the S&P 500 was up only 0.72% or 72 basis points. So how did Bitcoin fare? Well, I'm looking at the last 5 days because the last, day chart. Oh, now it uploaded. No, it still didn't upload. Yeah, it's still not uploading. So we're looking at the last 5 days. But if we look Tuesday, February 4th, we can see that there was a substantial drop. All right. And it looks like now it's starting to come back up. So it's been pretty volatile. It dropped under 100K. I haven't been following or tracking Bitcoin as closely as I should have. Because I think the last time I looked at it, it was like at 102 and I was like, oh, okay. And then I checked it today and I was like, oh crap, it dropped quite a bit. I don't know why. Obviously I think it has to do with the tariffs, but I could be wrong. I don't know why. No one really knows why. You have to base Bitcoin off like investor sentiment, and whatever investor sentiment is the reason why it either goes up or it goes down. Let's just take a quick look at gold. So over the last day, looks like it's been going up. Over the last 5 days, with all the tariff talks, looks like it's been going up as well. All right, so gold, it seems like it's been going up because of the worry of the tariff and trade wars that could be happening. I don't think Canada or Mexico are gonna try to not cave into the demands of placing border troops there. So, and again, the whole point for the border troops is to basically stop the inflows of fentanyl into the United States, right? But investor sentiment seems to show that, they want to move money into gold because gold is a good hedge against, inflationary pressures, and definitely placing tariffs out there, on our trade partners, that's going to be inflationary for sure. Moving on, this is the 10-year treasury. So just, I like to include the 10-year treasury in these little segments because, this is tied to real estate. It's a good thermometer or a weather gauge for checking how mortgage rates are doing. If we look over the last 5 days, especially with all the talks about tariffs, it looks like we had a really decent dip over the last 24 hours, which is really good. And I think this has to do with the whole, actually I have an article right here that kind of goes over it. But yeah, this is really good that this is going down, but not down fast enough. So the 10-year treasury yield slips as Trump imposes higher tariffs on China. The yield on the 10-year treasury slid on Tuesday as traders assessed global trade tensions and awaited more economic data. Investors are concerned that ongoing trade friction could slow economic growth and lead to higher bond prices. China announced on Tuesday that it will respond with a series of retaliatory measures against the U.S. and will pose an additional tariff up to 15% on select imports. And we kind of already covered what those imports are. The move comes after President Donald Trump imposed on Saturday a 10% tariff on goods coming from China. That's in addition to the 25% tariff that had been implemented in his first term. Traders were relieved Monday as Trump agreed to put a pause on tariffs on Mexico and Canada at least for 30 days, as both countries agreed to implement measures preventing the trafficking of the opioid fentanyl into the United States. So that'll explain why this, I guess, is going down. But more importantly, for people who are invested into real estate, let's see how VNQ's been faring. And, it looks like VNQ, which is the real estate index from Vanguard, it's an ETF. Looks like this one fared very well. It actually took the news very well. And with the 10-year treasury going down, there's a saying out there: when rates are down, REITs are up. When rates are up, REITs are down. So, this is true. This always rings true. So I don't really have to look at VNQ. I just have to look at the 10-year treasury to know if real estate's been affected or not, or REITs have been affected or not. All right, we're coming to the last segment of this, and this is always a fan favorite. At least this is my favorite. It makes me feel good about my losses. But we're going to take a look at some lost corn, okay? All right, let me zoom in a little bit. Hopefully you guys can see this. But yeah, 500K lost corn. Repost, but I don't know what mods want, so there's so many positions. Like nearly... 100% SPY ODTE positions with some Tesla in between. 24 years old, made most of this money from crypto in 2021. So it's not like it was my retirement. But yeah, you can imagine how I feel. Hopefully you boys feel better about your losses. I definitely feel better about any of my losses. Look at this chart. Look at this chart. Oh my God. It's always the comments that just make things so much better. Oof, now my $25,000 loss seems like losing a quarter in a vending machine. I turned 9,000 into 250,000 in 8 days and lost it all, and I'm now $15,000 in debt. I know how you feel, and it sucks. Man, that's so bad. I made $10 today in SPY trades. If there is a daily gain ranking in this Reddit, you are easily the top 5, no doubt. Oh my God. Oh man. 1.78 million, 10 years. OP probably thought he could get those in 6 months. I guess, yeah, someone right here, yeah, Jesus Christ, bro. It may not have been your retirement, but certainly was a massive kickstart. And then, yeah, this guy is talking about putting that money basically into like an index fund and how much it would be worth after a couple of years. Apparently, the OP, the original poster, thought he was above educating himself on option fundamentals before trying to make his switch from a lucky crypto guy to an ODTE trading prodigy. After his big crypto win, he probably made all the too common noob mistakes of conflating getting lucky with being skilled at investing. Don't we all make that mistake? Oh, man. He's 24. Oh, my God. Yeah. Now, now there's what I was looking for. Unzips. Sorry for your loss. Oh, no. Yeah, man, that's so unfortunate, man. Just to lose this amount of money on trading. And again, the guy was so young, 24 years old. But that's what crypto does to you, and that's what gambling does to you, right? Like people get really lucky. Or maybe it wasn't luck. Maybe it was like actual skilled investing of some sort, because with crypto you never really know. But to make 500K, man, and then to lose it, it's just, that would be heartbreaking. I would be so pissed at myself. All right, let's get to some comments. First, PMI, hey man, welcome back to the stream. Let's see. Who did I say I was gonna come back to? Oh yeah, Manish Chopra. Oh, okay, yeah. So yeah, Manish, I live here in Bangkok. So I live outside of the United States. I decided to kind of live in a low cost of living area because I wanted to make my money go a little further. So I decided to come here to Bangkok. My wife, she is actually Thai, so that's why I chose Bangkok. But yeah, I've been all over the place in Thailand. Like I've been to a couple different areas, and Bangkok's the first place that I'm living that I haven't been to. So far I really like it. Aside from the current like weather, which is, it's not that the weather is bad, it's that it's their burning season, so they burn a lot of their crops, and then all that smoke goes into the air, so it just makes it kind of like rough to breathe. If you have like any problems with like your I guess breathing or something like that, maybe if you have asthma, this place would not be good from basically January to, I'm guessing, April or March or April, one of those 2 months, because the burning season lasts that long. So, yep. Let's see. Mon Shopper asks, is anyone buying AMD? Sita has a small position in AMD. I think it's going to rebound too. I really do think it's going to rebound. I just don't know. No one knows. Obviously, no one knows when it's going to rebound. But I think the company itself has more prospects and more tailwinds than it does have headwinds, right? When you look at like a company like AMD, you want to know, what is it doing? Is it innovating? Is it creating new processors? Is it creating new features? Is it coming out with new software? Like, what is it actually doing? And if you look at the AMD earnings, we see that it's been doing really well year over year. Year over year, it's just been doing well. Why wouldn't you want to own a company like this? As opposed to, and maybe some people will be pissed at this, as opposed to MicroStrategy, right? Why would you own MicroStrategy as a stock? Only because it has Bitcoin, right? That's the only reason why. But if you look at this company, it just has not been doing well. It has not been doing well. Mod Shopper says bought a little more after the market earnings beat, but still the stock drops. Yeah, that's the story with everything. And maybe the reason why AMD or pretty much some of the other stocks are dropping is because of the one, I think it's the tariffs, might have some type of effect on that, even though they don't mention any technology stuff. But I think also the whole DeepSeek thing, I think that thing is still like kind of, scaring the market a bit. Just my 2 cents, because NVIDIA is still dropping too. So don't forget that. Yeah, interesting times, man. Interesting times. Yeah, I don't really know what I'm curious what other chip. Let's look at Micron Micron Technology, American producer of computer memory and computer data storage. Yeah, even they've been doing really well. But I think they've been lumped in with the whole AI stuff. I think they've been lumped in with the whole AI. No, looks like they've been doing well. Or not. Or not. Yep. Again. Yeah. Holy crap. Yeah. See, it was the same thing. .com bubble burst. Yeah. Then you hit. Yeah. So then like around here is when really like AI, like a bunch of AI stuff started coming out. Oracle. Let's take a look at Oracle. Sita asks, hey, do you hold any funds that generate passive income? I don't hold any ETFs. I used to hold QYLD, XYLD, and RYLD. The YLDs, the cover call ETFs. I since exited those a long time ago, about I think a year or two ago. Got out of them just because of the NAV erosion, and that's why I kind of steered away. And that's why I was really like, hesitant about anything from YieldMax. But just talking to other investors and seeing how some people are, gambling degenerates, I was like, you know what, maybe I should be a little bit of a gambling degenerate too. So, I put a little bit of money into MSTY. But no, I don't really hold any ETFs that generate passive income. I used to, like, I think I held SCHD for like a day or something, or a week, and I was like, wait, no, let me take my money out of this. This is dumb. I think I bought SCHD. I don't know if I did or didn't. I can't remember. But yeah, there was a point in time where I thought about just having strict, passive income ETFs. But I like having more control over my holdings. I like having that ability to sell in and out and not hold a bunch of losers, because some of these ETFs, they hold companies that I wouldn't touch with a 10-foot pole. So I don't know. There was also a kind of not a theory, but there was also something interesting that I read at one point. And it was like, because when you buy these passive income funds, whatever they are, right, even if it's SCHD, you still have to pay that expense ratio. It's like, why not just create your own ETF, your own portfolio of similar stocks, and you can just create your own yield, right? You can literally create your own yield doing that without paying an expense ratio, especially if you're planning to hold it over, 10, 20, 30 years. That made a lot of sense to me, and that's why I stuck with it, and I haven't invested into ETFs really. The only ETF I hold is an S&P 500 index. Yeah, I mean, SEHD is not a bad. It's not a bad ETF. I mean, I don't like. I don't like when people, especially for SEHD, like they discount it and they say it's trash because it doesn't grow as fast. It's like, that's not the point of SEHD. Like it's an income generator. It has one of the largest CAGRs around, compound annual growth rates. It's consistently paid out a great dividend every single year. It's consistently grown its dividend every single year. Like what wouldn't you, that's better than most companies. Why wouldn't you like SEHD? People are like, oh, well, the yield's too low, or, oh, I can get more, the share price isn't appreciating fast. Well, like, no, duh. Like, it's not supposed to. It's not designed that way. Look at the stocks it's holding. Like, these stocks pay out dividends. And when these companies pay out their dividends to their shareholders, that's money that they're not using to reinvest back into their companies, which means that they're not researching and developing. This is why tech stocks grow so fast, because they retain a lot of the money that they make to research and develop and improve their company's features, software and services. So yeah, I never really liked hit pieces when it comes to ETFs like SCHD. Now there are some really crappy, funds out there. Since we're talking about it, let's hop on it. First, let's talk about Oracle real quick. So Oracle is a software company, multinational computer technology company. Really, like, I know Oracle as the database provider. Like they have a huge software like hold on databases. They have some of the best databases out there. There's open source databases. I forget what they're called. Dan, I don't know if you can help me out if you know these ones, but Oracle has this one database that's like used by almost every company. They basically have a stranglehold on it. And then they bought some software that I can't remember. I'd have to research it. But yeah, Oracle's been around for a minute. I think they're a pretty decent company, and they're part of the whole Project Stargate thing. So let's see. Let's see what their earnings look like. Yeah, so not bad. They missed a couple times, but not bad overall. Decent company. I think with the whole Stargate thing, this is probably going to be a great tailwind for Oracle more than anything. Yeah, well, yeah, they own Java. I don't even think Java's around anymore. Like like Java, the software, isn't even around anymore. Jeff Welch says, I bought ESGV without knowing it was a green stock, but it's been doing quite well, up 22% over a year. I've never owned any ESG stocks or any ESG ETFs. I know they were like all the rage for a while, but I just never did. I never bought them. I don't know. I didn't really care. Like I owned what's that tobacco company? Altria Group. I owned Altria Group for a little bit, and I think I owned another Sin stock. Yeah, they're called Sin stocks. But yeah, I owned Altria Group at one point. Every Android device pays Oracle. Well, there you go. Yeah, there you go. Yeah, let's take a look at another passive income ETF. And for this one, we're gonna take a little trip down to let's take a trip down to Global X, because Global X has some decent ones. Now, here's the thing, right? You have to know what the underlying security is. This is why people dog on SEG, because they're like, oh, it didn't grow fast enough. Well, no, duh. Look at the damn holdings. But there are ETFs so when we're talking about passive income ETFs, there's like 5, 6, probably 10 different variations of, passive income ETFs, right? You have dividend ETFs, you have preferred share ETFs, bond ETFs, high dividend yielding ETFs, dividend aristocrat ETFs. You have all types of income ETFs, right? But you have to understand what the underlying is to really get an idea of what you're buying into. And this will tell you whether it's a grower or slower or whatever you want to call it, whether it just pays out high dividends but the yield price continues to go down. Like, these are the things you have to really look at. So Sita asks, you mentioned you saved a stockpile of cash. I hate to see you dwindle it down to zero. I want to see you succeed. Hey, my brother, that's what I'm talking about. I want to see all of us succeed. Yeah, no, I'm holding on to the cash pile for a couple different reasons. One of them is obviously it helps pay for some of my expenses out here, right? But also I'm holding on to a portion of that. And I'm waiting for a couple opportunities to show themselves. And when they do, that's when I'll hop on them. That's when I'll probably announce it to the channel or talk about it on the channel. Let's see. TNXP. I don't know what this is. World free speech. Anyways, let's take a look at some of these ETFs. So the one I want to show you guys, man, I hate that. Okay, I got to keep looking to make sure you guys can see this. Yeah, so this was the QYLD I mentioned. Let's see, which one is the one I was going to look at? Yeah, preferred. So there's preferred shares. I don't know if you guys know what preferred shares are. Preferred shares, as opposed to common shares, preferred shares, the only difference is that you don't get to vote, right? There is no voting with preferred shares, but you're paid a much higher yield than if you were to invest in common shares. And say something was catastrophic was to happen and the company is going to go bankrupt, preferred share owners would be paid first before common shareholders. All right. So just something to think about there. But let's look at that. Let's look at, yeah, super dividend ETF. Let's look at another one here. You know what? I'll show you guys one that you guys might get a kick out of or not. Go to Seeking Alpha for this one. So there's a ETF out there. It's a mortgage REIT ETF. A lot of people, you know, their mouth starts foaming. You know, they start watering because they're like, yo, that dividend yield is fat, bro. But then they don't realize that this thing has been on a steady decline forever, because mortgage REITs, I don't think mortgage REITs actually grow in value, to be perfectly honest. But there are some investors out there that are diehard mortgage REIT fanatics, and they will die on that hill. But if we look 11% yield, it pays quarterly. This is one that's a really popular one. You know, but again, like, it has not been doing well. But up until 2020, you know, it sort of was kind of trading flat. So I mean, you're not making money, but you're not quite losing money. And then, you know, now it's obviously been down so much. Down 53%, you know, over the last 10 years, down 53%, 5 years, 1 year looks like it's up. Year to date, it looks like it's up. But let's look at PFFD. So yeah, this is investing in a basket of preferred shares. Okay. You can't buy preferred shares on the open market. You have to usually call your brokerage and ask them for it. So like if you were with Fidelity or if you're with Vanguard or Schwab, you have to actually call the customer service and ask to make that purchase. You can't just buy preferred shares. So there's some risk that comes with them too. Like there's credit risk. There's all these different risks in preferred shares. Definitely something worthwhile to look at. But if you're not, you know, a super savvy analyst, you know, you don't want to trudge through a bunch of documents, I like to go the ETF route personally. Yeah, monthly distribution 7 years 7 years running, right? Expense ratio is less than half the competitors, which is I don't know too many other competitors that do preferred shares, but Global X does keep them fairly low at 0.68 basis points. This one has actually 0.23, so I know this one is definitely the lowest. 2.3 billion assets under management. But yeah, if we look at the tickers here, so this is JP Morgan. I'm guessing this is, I don't know maybe Alibaba. This is HP, JP Morgan again. Yeah, but these are all like preferred shares. So I'm guessing this is T-Mobile. I want to say the back is Bank of America. Yeah, so this is Duke Energy, if I'm not mistaken. Yeah, so these are all, there's Ford. Yeah, so these are all preferred shares. So they hold a basket of preferred shares, and preferred shares typically pay out a lot more than common shares. We can see in their dividend yield for this, basically a 7% yield. Or, what was it, 7%? Yeah, 7% yield paid monthly, right? Pretty good. Not bad, not bad at all. Then we have the super dividend ETF here. 50 high of the highest dividend paying equities in the United States. All right, just because they're paying the highest dividend doesn't mean they're great companies. So let's see, 45%, 660 million. Yeah, a little, yeah, under 6%, and they pay this monthly. But let's look at their actual share prices. Yeah, you see? Yeah, you gotta look at their share prices to get a better view of their story, right? This is the whole C19 thing, and then it looks like it recovered, and then interest rates just completely annihilated it. These are very, very sensitive to interest rates, so you have to keep that in mind too. All right, but yeah, it looks like they just got completely wrecked. So down almost 22%. Now, if we look at SDIV, or if we look at DIV, again, same thing. That is, whew, man, that would scare the living bejesus out of me. Yeah, since 2013, right? 2013, it looks like it was kind of trading sideways, right? This to me is trading sideways. And if you're reinvesting the dividend, then obviously this total return would be way better. The total return would be way better. This is just share price. But then you had C19 happen, it recovered, and this is almost similar to like what SCHD has, right? If we look at SCHD, again, like, except SCHD recovered and then some, but it has almost the same kind of like pattern as DIV. This is why I don't get why people hate SCHD so much. Like, SCHD is awesome. It's a great pick. Like, this is for the investor that doesn't want to pick and choose a bunch of freaking companies and build their own portfolio. This is like a done for you product at a very, very cheap price. So I never understand why people hate on freaking SCHD. Let's see. Jeff Wells says, I'll certainly dip again for you to get back in, but I think it's definitely going to be a long-term play. Palantir, that is. Okay. Wealthy Life says, I know this is a $1 trillion company, but man, it is trading rich. These definitely the questions we must ask ourselves, Dan. Yeah, talking about Palantir. I don't know. Maybe I should open up some positions or something. I don't know. I always had this thing where I didn't want to invest in individual like tech companies because one, I can't deal with the volatility. I'm not gonna lie, I just can't. I'm more risk averse. I'm more of a conservative type of investor. But yeah, I mean, with this over this next decade, like looking 10 years out, I can definitely see that Palantir is going to be around. It'll probably be the biggest defense software AI solution out there. I can definitely see Microsoft is never going anywhere. Google's never going anywhere. Meta, I don't know. I mean, I don't use Facebook anymore. I don't know about this whole metaverse thing. Personally, I don't know. I don't think I'd invest in Facebook. Apple, absolutely, for sure. They have one of the most diehard crowds, fan loyal supporters out there. Like, they could probably raise a private army if they wanted to, if Apple wanted to. Same thing with like Starbucks. Like Starbucks has such a huge fandom. Like, people are diehard Starbucks people. You try to give a Starbucks fan Dunkin' Donuts coffee and they'll spit in your face, right? Like, sometimes, I don't know. Sometimes it's just, it's not erratic, but it's like, it doesn't make sense, right? Like, it makes no sense. It's irrational is the word I'm talking about. It's irrational. So yeah. And again, guys, like, investing in income ETFs, you gotta look at the bigger picture. You gotta look at what you're actually investing into and really understand, the reason for it. Because if you're investing for income, it's gonna take a long freaking time to make anything meaningful, right? To make any type of meaningful income. And this is why I think investing in tech would, probably be a little more beneficial especially for people who don't know really what they want or what they're doing, or how much, you know, they can actually put away in assets or in money investments. Because if you invest into, let's say you invest into SCHD, right? Let's say you invest into SCHD. It's going to take a lot of money to make any type of passive income, like to really make any type of passive income. Sure, your share prices will appreciate. You'll be able to drip and, you know, get that compounding much quicker. But alternatively, you could probably put the same amount of money into an S&P 500, into QQQ, and make even more money. The only difference is you're not making passive income. You'd have to sell those shares to basically generate your income, right? So there's always two trains of thought. I liked the passive income dividend route because I don't have to sell shares. I could just continue making passive income, dividend income from the companies I choose, right? I don't have to sell anything. I could hold these for forever and I won't have to sell. But of course, in the beginning, it's hard to really make anything meaningful, or to have any kind of meaningful progress, because it takes a lot of money. It takes a lot of money to invest in, especially dividend paying companies. We're not talking about dividend paying ETFs, just dividend paying companies. It takes a lot of freaking money. And I mentioned that in some videos, and people are like, oh, you know, you just put your money in the yield max. Like, oh my God, dude. Like, oh, just put your money in the yield max. You know, you're going to get 100% returns. Like, that's not how any of this works. That's not how that's not how this works at all. Yeah, exactly. Jeff hit it on the head. Like, SCHG doesn't make enough dividend income to make it worth it, right? For the short term. Over the long term, many, many years, it probably would, right? Depending on what your financial goals are, whatever you want for income, all that comes into play, you know. But Jeff Welch strikes me as like a multi-billion-dollar, you know, playboy. So why would a multi-billion-dollar playboy have any money in SCHD? So Ceta says, or Jeff says, I'll do the dividend stock thing when I get closer to retirement. You see, exactly, I called it. He's billionaire playboy. Ceta says you need a chunk of capital to notice a difference. Yeah, exactly. You need a lot of money to make anything meaningful. Like, even on my REIT portfolio, you know, it's only generating a little under 10 grand a year. Now, that's, for me, that's good. I like that. You know, that's not bad. You know, that coupled with all the other real estate investments, you know, that makes a pretty healthy, you know, decent investment or decent income. But again, had I invested all that money strictly into maybe an S&P 500, probably be a different story. If I invested all that into VGT, probably a different story. But again, I would have to sell the shares in order to make any type of income. And then not only that, you know, I could have just put all the money in Bitcoin and called it a day. Who knows? Jeff, man, don't play. Jeff, don't play, man. I know you. You already got like multi millions. You don't even have a 401k. I know it, dude. You don't even know what those numbers are. Like 401k, what's that? Don't be playing. Don't be playing. I know there's some of you guys in this chat. Some of you guys in this chat definitely are some Lambo driving, Bugatti driving, freaking mansion living, yacht surfing, multi-billionaires in this chat for sure. Stop playing with me. Yeah, but ladies and gentlemen, I believe that will do it. That will be it. We're at the top of the hour. I really don't have anything else for a 1 carat gold rush. That's what I'm talking about. That's what I'm talking about. Yeah, that's right. I understand the K in 401. That's for carats, right? But yeah, guys, I don't have anything else. Unless you guys got something else, you know, I'm gonna cut the stream right here. Taking all questions. SPY is boring. SPY, dude, that's why you say you SPY and chill, right? It's the easiest investment anyone can get into. Yet it's crazy that a lot of people still don't get into it. Like just the other day, I was talking to some people and they're like, "Oh, you know, what's the S&P 500? I have no investments." I was like, "Oh, it's this, that, and the other thing. You know, invest in that." And they're like, "Oh, okay, that's so nice." And then in like the same breath, they're like, "Oh, I really like crypto. I'm going to be putting my money into this shit coin, this altcoin, this meme coin. Yeah, I think it can go 100x. Like, oh God. Come on, man. I just wasted a whole hour telling you about the benefits of this S&P, and you're going to tell me you want to put your money in freaking crypto coin. God, man. But all right, guys. Yeah, I'm going to call it. I'm going to call it here. But thank you guys, as always, for joining the stream. Hope you guys had fun. Hope you guys got a lot of value from this. If anything else, I will see you guys in the next stream. You guys have a great day. Far Out Aliens, what's up, man? Sorry we're cutting the stream. Take care.